Hello, welcome back to another exciting episode of the Broiler Chicken Show. And I don't know whether YouTube cuts that out. Did YouTube hear any of that? Oh, goodness. Anyway, Chris is like, "Yeah, Brian, save your breath. Nobody can hear you clucking away." Anyway, so Chris is over here. So if you ever see my head turned sharply to the what direction is that? Right? It's because that's where I've got Chris. And I always check in to see whether my jokes land, whether he actually puts a smile on his face or not. But quite often, if I'm doing really bad, he'll just turn the camera off and say, "Brian, you're on your own today. Good luck." Anyway, you want to say hi to these good people, Chris? It's up to
Hello,
you.
good people. Happy Sunday.
All right. So he's got that smooth, sexy, deep voice. Hey, hello, ladies. You gotta give a shout out to the ladies, right? All right, enough is enough. That's our camera just turned off. Anyway, oh, and the house plants too, right? This is the world that we live in. You can't leave the house plants alone. Shane, I know you're out there. You house plant, you. Anyway, welcome back to the frivolity. We have an hour and a half, probably stretch it into 2 hours of fun with you guys. Then I will head off and try and give my son the best afternoon possible that a guy can. Um, and we'll do it all over again first thing tomorrow morning. Of course, markets open up and back to trading. So I hope you're enjoying the late, I guess it's still spring, right? So I guess it's the middle of spring right now. April showers, spring, May flowers. I can feel, where's the camera? There you are, you're over there. I suppose if you're down in the southern hemisphere, we do have quite a few people that tune in from South and Central America. Well, I guess South America and Australia and stuff. So I guess it's the end of the summer for you guys, but nonetheless, we are amidst seasonal shifts. I think probably anybody who did step up and heed my warning. Do you have your together? Try not to swear on YouTube as much as possible or as little as possible. Back in November, December, gotta say those that council was spot on. I mean, it was this year was absolutely perfect seasonal expression of the market. I have to say it was just absolutely spot on. And you know, the TRIers who have plans together and who executed on those plans, man, we saw people banging out doubles like they're going out of style. Also, too, I was pleased to see that a lot of the people that we've taught over the years have gone on to create their own communities and stuff. So I think we've done JoJo's work. Spirit, I think, would be pleased at this endeavor. And really, it's just a question of just, you know, can we demonstrate best practices? You're probably going to hear from me that there's a million different ways to trade. You don't necessarily need to be cornered into one particular approach, one particular set of technical analysis tools. Hell, some people just trade purely off fundamentals. We also now have what's called quantitative analysis, sentiment, if you will. So there's a million different ways to skin this cat. The question ultimately is, can you put together a plan and a sort of procedure, if you will, for you to come to the market and execute your plan on a daily basis? You have all the tools necessary laid out in front of you ahead of time to execute your plan, and hopefully, if you've vetted your setups, enjoy the rewards. Also, too, I think it's important to understand, I don't think enough people get this, that there are different types of risk takers in the world. So there are the people that will go, like, you know, we used to have a guy on the site who used to always talk about aping in and all that. I don't mind if you ape in, but you just better manage risk. And unfortunately, if you ape in, there is a very real possibility that the market reverses and maybe you're like falling into a trap, which often happens in the market. And you have to admit that you're wrong. And at that point, then it becomes okay, I'm now into capital preservation mode and I got to put my ego away. Clearly, I wasn't right about my thesis, and how am I going to manage myself to get out of this situation? There are other type of risk strategies that speak to those people that don't want to have to make that decision on a daily basis. Affectionately, we called one particular risk taker, and it just happened to be a type of investor that I used to have when I was a full service broker, are little old ladies, and they don't want to be stopped out. They don't want to have that phone call. Oh, hello, this is a margin call. Give us money or we'll take your house. They just don't want to ever have that conversation. So aping in is not on the table for them. That just doesn't exist. So, ultimately, my education program that I built for you guys years and years and years ago was just simply an expression of how do we set ourselves up to come to the market and participate on a daily basis with a clear head, and not riddled with anxiety. What do I do? What do I do? Because often when you go down that road, then you start, and actually I even start seeing it on YouTube now. They're talking about, paralysis from over analysis. One of my old mentors, buddies, I'm not quite sure what you call him anyway, Johnny Hoagland over there at Top Step, he used to always bark about that. Then, if your particular setup doesn't work, what I see a lot of people do is they start now surfing the net. Well, maybe this indicator is the secret, or maybe this indicator is the secret, or this indicator is the secret. And now we have people on YouTube that are just like literally, they're writing scripts, firing them on TradingView, and then just hitting the, hey, look at this trade did 728% return. Subscribe to my indicator and you'll make tons of money. And it's like, oh boy. What am I trying to say with all this? Good. Yeah. If you're watching this video for the first time and you're relatively new to investing and stuff like that, at least what hopefully Brian does is he just sort of lays out what the framework of running an effective business of trading is all about. I'll give you my opinion of what I think is going to happen in the marketplace, but at the end of the day, my opinion, to be perfectly honest with you, is not really worth that much. Nobody's opinion is really worth that much. I don't care who you are. In fact, I mean, hell, they got guys on big multinational, international broadcasts, the Jim Cramer guy. And there's even people that have created a mutual fund that the fund does nothing more than it just takes the exact opposite side of the trade of whatever he's recommending. So, that's how brutal this world is. But the point of the matter is nobody's going to be right 100% of the time. And sometimes you'll even go through little spats where you can't trade your way out of a paper bag, a wet paper bag for that matter. And it's not, unfortunately what ends up happening, especially in this, testosterone driven world, is a lot of ego, a lot of personal self-worth is attached to what your performance of your last trade is. So if it was a winning trade, oh, you walk on water, you're the man. Oh, everybody get down and, pray, kiss your feet kind of thing. And if you lose money on the latest trade you did, oh, you suck. I want, call my lawyer. I'm going to sue for my money back. All that kind of stuff. People just don't understand that. Probably, I don't know. I think the biggest message that I could convey to all of you is you have to take personal ownership of your money management. At the end of the day, every decision comes down to you as an individual. And yeah, I think I'm trying to articulate why I built this education program and how it caters to the entire sort of universe of investors, and how really it's just a question of you have to figure out what type of risk taker you are and then build your plan around the type of risk taker you are, and then go from there. Of course, the type of risk taker you are is going to clearly dictate, what time frame you're trading on. Obviously, little old ladies have no business day trading. And also too, it's a commensurate on reward. And the one good thing that I really like, in fact, actually a little concerned about our level 1 education instructor right now. He's going through a couple tough curveballs in life, and it happens. It happens to the best of us, all of us. Hell, you all know my story. I mean, talk about curveballs. Oh boy. So I was actually going through and grading some exams myself from the level 1ers today, and I was actually very pleased to see that like some of the questions that we have to manually answer as instructors on the course are things like, why do you plan? And ironically enough, a lot of people in the public, if we got 20, 30 people here watching this video right now. If I just did a simple poll, why do you plan? Why do you build an investment plan? You'd be surprised. Most people don't really know why. So I was actually quite pleased to see that, the exams that I was marking today, a lot of them, they're just nailing it. They get exactly what this is all about. This is all about you setting yourself up to succeed. It really has nothing to do with your social media standing. Yeah, thank you, Aaron. Nicely said. It's the anxiety of not knowing what's going to happen. That's what usually kills people. Then they end up, going and second guessing themselves, right? And then if this particular setup doesn't work, they don't understand that actually any plan that you build, any program that you build to be a professional trader. When I was working with this CME, the actual pit traders, they shot for 55% accuracy. That's just a little bit more of being right versus being wrong. Not a huge amount, but of course, we all know from listening to Brian over the years, what is it that has to happen? I'll be curious. I'm going to harass Chris here. If you are right in the marketplace, what has to happen relative to when you're wrong in the marketplace on your winning trades, Chris?
You have to be a winner twice as much, or your winners have to be twice as much as your losers.
If you can average twice as much, then you are a trading god. I mean, I know a lot of guys that shoot for like 2-to-1s, and they'll be happy with taking, over a long-term track record, maybe like 1.5-to-1 risk reward, 1.75-to-1, that kind of idea. But the point here is, what I was hoping Chris was going to say is, you gots to get paid. I mean, that's the key to this, is when you are right, you gotta get paid. So anyway, so why am I starting off with this video with this tangent? I'm a little concerned. This is a really, really dangerous part of the market right here. Price is like twice its floor price if we talk like something like Bitcoin. So you can't say that there's no risk involved in the market right now. Price has doubled since last fall. I don't know whether you're aware, but Peter Lynch had a famous line that he said that if you can get better than 30% annualized rate of return on your money, then you've beaten 90% of all investors ever. So that technically means that if you went and bought Bitcoin last November, December, when I was screaming at everybody, do you have your together? Everybody knows what that word was. Don't want to say it on YouTube. Blah, blah, blah. Social media, social credit score. Oh, God. You can totally see it coming. But anyway, point here is if you just went and sold now and said, that's it, I'm done. I'll see you next November, December. I'll come and buy it back when I'm supposed to, buy when it snows, sell when it goes, that kind of thing, then you're done for the year. So I don't know. Is that your plan? I mean, I'll tell you, it's a pretty simple plan. But anyway, a bunch of altcoins, of course, have gone absolutely crazy. We had a few people on the site there through the spring who were like banging out doubles on a daily basis. Don't really see them too much on the site anymore. But on balance, I think basically the market's just doing what it does. The question is, can you manage yourself? So as I said there a moment ago, I mean, the old cliche, and this is what, probably to bring this all around back to crypto and trading, is, before we leave that topic, just be warned. And warned's probably not the right word. If you have been watching these videos, and I do know a lot of people watch these videos after the fact, hit the like button, subscribe if you like, maybe even hit the little notification so that you get notified when Chris fires these things up. That's always good. And, I've actually seen some people in the past have literally taken a notebook and just started from scratch, not knowing anything. And they just sit and watch these weekend videos and take notes like a son of a gun. And within a year or two, you're basically at a point where you've self-educated yourself. That's how powerful these free videos are. No doubt about it. I don't think a lot of people in the world, though, can do that. There's a few people that are really good self-teachers. But most of us, we need kind of a helping hand, just sort of a guidance. And what we've actually created at TRI is like it started out as a 36-week program to go from sort of beginning to end. And then, of course, along the way, I found probably at least another dozen or so modules that I could teach. I just really haven't gotten around to building them. Then I've actually had another one of our level 3 instructors, Zach, is really, really big on spread trading. And he's created a whole spin-off program on trading option spreads. And FYI, that inaugural sort of pilot program that we're doing to sort of test out his material, that begins also this term. So any alumni that are watching this video, maybe you haven't checked in on TRI for a while, had a couple people that were on the reservation list back away this coming term. So if you are interested and you are an alum and we're like, oh yeah, I totally wanted to do those option spreads, Zach's got a 12-week program already just to make you an absolute badass option spread trader out the backside. But I don't really like new people to trading to take those kind of programs. It's pretty dangerous if you're not working with a trading plan, you don't understand risk management, to just jump right into options because you can get your head handed to you really quickly. So that's just an FYI to the any OGs that happen to be watching this video, and you are interested in Zach's program, and we also have it as a discounted rate for this pilot program. And just reach out to me, and we'll see if we can sneak you in there. We can also send you some more information if you're interested. But for the general public who's watching this, like I said, you can go this self-taught route, and hell, you can just park yourself on the YouTube page, and it'd be actually interesting, Josh. I see you over there on the YouTube page. To actually count up how many hours of video lecturing we've actually done. It's got to easily be in the thousands of hours on that page, because I've been running these videos now, geez, for the better part of 10 years. Every Sunday, at least 2 or 3 hours. So that's 100 hours times 10 years, 100 hours a year times 10 years. Geez, that's easily 1,000 hours. So you could just sit for like 1,000, 2,000 hours if you can find that long. Maybe put me on 2 times speed. That way you can knock the. No, I'm one of these kind of guys. I don't know why, but you could actually put me on 1.5 speed, 2 times speed, and you can actually still understand what I'm saying. So maybe that's something to consider. But what I was going to say is, for those people that need a helping hand, you need guidance. And the guidance is more about, how do we build our small business of trading? It's not specifically about this squiggly line or that squiggly line. The level 1 program is all about, how do I build a trading plan? How does that trading plan perfectly reflect who I am, what it is that I want to do in the marketplace? And by the way, you know, level 1ers who did take the exam, and I was marking their exams, I mean, your tactical plans, your strategic plans, que bella. So clearly our level 1 instructor doing a fantastic job. You know, just keep on keeping on. So if you need help with that, that's what this whole School for Trader Development program it is. It's about, we have it 1,100. We're trying desperately to hold on to that $1,000 price point, which I think psychologically is important for people who are relatively strapped for cash. I can completely understand. This is a tough world we live in now. But if anything, with the whole hyperinflation, I mean, hell, rents have gone up like 30-40% in the past few years. You go to the grocery store, it's embarrassing how much you have to pay. You know, in my country, the grocery chain executives actually have the audacity to say in Canada that chicken now is a specialty meat. I mean, is this not Klaus's plan to all have us eating insects? Where they could actually come out and have the audacity to say something like a chicken is now, oh, that's a specialty product in May. If it takes, a day's wages to buy a chicken to eat at night, well, tough shit. It's terrible. So, I mean, all jokes aside, I mean, it's not really very fair to all of us, but Klaus is doing his great reset. My suggestion to you is take advantage of the fact that TRI is not great resetting you. We're keeping the prices relatively low. And once you learn this skill set, you've got it for the rest of your life. And you would have been in there buying up last fall and early winter, and you'd be selling now at a pretty handsome profit. Then you can go buy all the chickens that you need. So, FYI, school program's coming up relatively shortly. As well, too, we do offer a raffle because, hey, karma is karma. So we'd like to try and spread the karmic goodwill. Every term, we do raffle off a seat for the level 1 program. And if I understand correctly, we're planning on doing the raffle next weekend. So we'll do the raffle, and then the school enrollment program will wind up, and then we'll start in on the level 1 program in earnest. So be aware of that. And if you do decide to, say, sign up for the school program, you happen to have been in the raffle, well, we'll credit you back the money. So, I mean, if you won the raffle, you won the raffle. So just FYI on that, we do have a program where one student every term gets a free ride. So maybe that's you. Hop on here, sign up, throw your name and your email address, and we'll spin that wheel next Sunday. So just be aware of that. If you are on the site, and I do see there's 30 some odd people there over on YouTube, we don't have anybody in the lounge with us today. It's a bit surprising. But nonetheless, hey, Nick's here. Oh, is he here or did he bail? Maybe he left. Anyway, what I was going to say is, if you are on the site, if you are watching over there on YouTube, I mean, I suppose you can ask a question in the I don't know, the live stream feed, I guess it is, over on YouTube. What I typically do now, school's out right now, so it doesn't surprise me that it's pretty quiet here on the Q&A document. But for people that are on the site, and look at that, somebody's already asking. There you go. So if you are on the site, if you are one of these 30 people that's on YouTube that is a site member and you'd like to ask a question, feel free to pop into this document. I think, Chris, you put it in the lounge, right? Right. So, feel free to add your question here. I see there's a couple people on here. And we will get to this near the sort of second half of the broadcast here today. So we gave you the shill. Want to set yourself up to change your life. We haven't hyperinflated the prices like you see all around our society. Take advantage of that. If you maybe are lucky and you have a raffle opportunity to win the raffle, maybe join that as well. The only other thing that I wanted to add to all that is, like I said, Zach's got a level. We wanted to call it 3.5 because it wasn't really a full level 4 extension. It's more of a, we introduce you to options in the level 3 program, and then Zach loves trading options so much, and he is our level 3 instructor. He's like, really, we should have a conversation with these people about spread trading. And I do so much spread trading with seasonality, with sector rotation. Do you mind if I put this together? And I was like, yeah, go for it, man. Totally awesome. So if you are a TRI vet and you want to participate in that, just reach out to me and we can sneak you in into the pilot program. It's a little bit discounted price too. So a little bit of a bonus there. All right. Broader market kind of commentary. Maybe Chris, we can do a, there was the intro piece, little shill about the school, and then we'll break into sort of market analysis, maybe chapters or something. Just FYI, Sjord went and changed one of the notations on the dashboard on the bullish percentage index to neutral, and everybody on the site was, what does that mean? What does that mean? And I even went, okay, Sjord, no idea what the heck you've done here. So, hey, I think we go like Ricky Ricardo. Sjord, you got some explaining to do. That mind you, do you even remember Ricky Ricardo? Does that sound at all familiar to you, Chris? Oh, God, dating myself a bit here. Anyway, that was I Love Lucy from when I was a kid.
Yeah, I used to watch that with my grandmother back in the day.
Okay, fair enough. Anyway, so the point is, and if it helps in the analysis decision, awesome. If not, don't sweat it. Interesting how the entire broader market, he has the whole damn broader market neutral, but he's got crypto top 30 bull. Okay, well, I suppose I can live with that. And actually, we'll get after I finish the dashboard summary, we'll head on over and look at my sort of every Sunday. I think it's a good idea to just put together a weekly, daily, and 4-hour summary of Bitcoin price. So then that way we're on record. We basically every week we do the Bitcoin summary price analysis. Actually, I incorporated a concept from the weekly commodity trend survey. That's what this WCTS is. Sjord's got here weekly commodity trend summary. But the point of the matter here is this, and it's part of the sort of advanced dashboard membership. But this is what I used to run as a commodities broker. This is the way I used to trade commodities, is I would just simply ask, where is a commodity? And we're using stock market proxies because the data vendor that we use specializes in commodities. Maybe 10 years down the road we might get into specifics for commodity contracts, but for the purposes of this survey, this is just based off of the ETFs and market proxies. So you can see we have the crypto top 30, and I actually like the algorithm that Sjord has built. We just simply go and ask what are the biggest 30 crypto market cap names, I guess, other than things like stable coins. And then we do the survey off of that. We also, as I said, like this is where I used to do this in earnest, is in the commodities pits when I used to be a commodities broker. It's very effective, very, very effective. We cover the bond market, all the country funds around the world, stock indexes, sector ETFs, the Dow, industrials, utilities, and transports. And I have asked, and hopefully we'll get to it soon, that we could add the NASDAQ 100 into this list, which shouldn't be too big of a request. But anyway, we'll get to it down the road. So the point here is, and this is a nice little summary, and you see on the dashboard, that's basically what this summary box is that you see. Everybody sort of joins the site, you get the summary box, the actual breakdown of the sectors. It's a little bit more advanced, and we ask for a small contribution on an annual basis to participate in those pages. But you can see really simply here, fives and sixes. And actually on the crypto page, we have a crypto page built into that advanced site membership for those people that are strictly crypto related. Fives and sixes are six is the absolute best technical score that you can have. Five is obviously second best, right? And then 4, 3, 2, 1. And you can see things like threes, obviously, well, not obviously, but crypto is relatively healthy right now. So it's not likely we're going to have ones and twos. Those would actually be shorting ideas in my eyes. Fives and sixes are the best technical score. And you can see there are a lot of names on this list that are fives and sixes. So I even put out on the weekly summary, I hear a lot of people, especially recently, are like calling for like Bitcoin to break. When I know I'm not going to say a lot of people. There are probably like the silent minority. That's probably the best way to describe it. But the problem here is this isn't a price chart that's bearish. This isn't a price chart that's like, oh my goodness, there's going to be a lot of people that are walking into a trap. If we pull up that Bitcoin chart, I mean, there's plenty of times. I remember over here, and if we look at things like technical indicators, when you have the way that we like to teach people to trade is first decide trade location. And it might be something as simple as like maybe like a Foggenbaum study, which just simply says you're going to take the right-hand side of whatever your W is and just start applying things like Foggenbaum constants back up against the previous high. That's what this 2.618 and 4669 are. So the point being that you can see 4669, we banged into a very, very important Foggenbaum level up top here. So, you might consider that trade location, whether it be to take profits, ring the register, or actually outright hunt shorts. The point here is that we always try to teach people, number one, trade location. Number two, indicator confirmation. So you might argue that, say, number one was trade location up in this Foggenbaum area. And then number two, indicator confirmation, whenever you see an M in the indicators. And of course, I built this specific indicator when the yellow line is above minus 20. It means that the market is overbought. Then all you're looking for are things like M's in price. This one's a little bit tough because, there was an M that came in here. It was a nice dump that followed it. Did you take that profits? I mean, there was a W that came in following that. Maybe you covered your shorts down in here and you started going long again. I don't know. This M over here didn't really develop, kind of a real pain in the butt top. But the interesting thing about that is that we always say that V tops like to be tested. So what this is implying is that at some point down the road, we are going to have to test that high. So I suppose that's a good sign. But the point being that I don't really like for people to take trades, especially short trades, down at the bottom end of trading ranges. That's kind of, ironically enough, institutional players buy down markets and they sell up markets. So like this kind of scenario, it would make sense that institutions would be selling into this top and ringing the register and taking profits. But now that we're in a dead market, and then, I have one concept that I teach all my basic students to trading called the reload zone. And it just graphically helps you see bottom ends of markets. This is the 61.8 retracement of this range. And this is the 78.6 retracement of this range. Or the market has taken back 61% of this big move. Or the market has taken back 78.6 of this big move. Well, that's now the bottom end of the trading range. So you getting overly bearish down in here is kind of asking for trouble. And that's kind of the environment that we're in right now. Is we're still we're at the bottom end of this trading range. And even if I just look at things like 52-week ranges, this was the low from last November. This was last seasonal peak high. That's the March high. If we think about things like 50% rules, Mr. Gann would say that this number right here, we can even just make it just a 50% rule. Boom. That's actually where the market should trade back to if this is just nothing more than a very normal, healthy market state. And I hate to say it, but we still haven't even gotten back to that level yet. One might argue that, okay, that is the March high. And if you're thinking 52 weeks, we got to keep moving this forward. Now we're into, of course, late April, early May. So there are 50% levels off of that range. Got an itchy eye for some reason here. So maybe we have hit those 50% levels. I can concede that. But I would say that, this is a pretty significant swing high. This obviously is pretty important swing low. I still feel pretty confident that we're going to work our way up into these areas. And then also too, this is getting a little bit more advanced, but if you just think about it in simplest terms, this is what's called an head and shoulders pattern. It's upside down. Why do they call it a head and shoulders? And you even see on sites like TradingView, if you come down to this 1, 2, 3, 4, 5, 6 box here, and scroll down, you see it says head and shoulders. And the reason why is because the pattern ultimately looks like somebody's head and shoulders. So shoulder, head, shoulder, sort of call that your support line. And if we break through that support line, that's a reversal signal. This is also sort of a universal concept in nature. It's actually called a fractal. And the easiest way for you to think about the validity of this head and shoulders is, let's maybe make this yellow so you can see it. But we don't need the text that big. Where's the border? Hey, there we go. Think of something like the maple leaf. How ironic, Canadian talking to you. So if we, there's the Toronto Maple Leafs. If I understand correctly, they're still in the playoffs. But anyway, this is Mother Nature at work. Do you notice? Left shoulder, head, right shoulder, reversal. I mean, this is just the way nature operates. Sometimes, of course, these patterns can be in fives. So it's almost like you have a small shoulder, bigger shoulder, head, smaller or bigger shoulder, smaller shoulder, reversal. So, the textbook definition does alter between 3 and 5. But actually, just looking at this image right here, I mean, this is a perfect example of the way Mother Nature works. It's called a fractal. So that is basically that head and shoulders pattern. There we are there. And in this particular case, it also works the other way around. So I could reverse that there and reverse that there, put that there, reverse that there, and put that there. And now you see that it's basically the exact same thing, just flipped upside down. And so we call this an inverted head and shoulders. That's pretty straightforward stuff. But hey, if you've never seen this before, if you've never heard of anybody talk about this before, take a note. You should all have your trading journals out. And in fact, actually, look at this. This is a TRI in our merch shop. You can see opportunity is now here. Isn't that cool? And really, there's no wrong way to read that, right? Yeah, that could be read opportunity is nowhere or opportunity is now here. It's all really a question of your perspective. And then on the other side of the journal, look at that. We got the Benner cycle there. Ooh, isn't that sexy? That's Josh's gift to us. Thank you, Josh. That's such a great job he did. Anyway, so here is my trading journal, and it just sits right beside my desk, right? I'm not going to obviously show you, oh, I'm not feeling so good. Oh, I'm feeling great. Oh, I'm feeling awesome. Oh, I'm feeling terrible. But the point here is that everybody should have one of these beside their desk. If I've just said something that you've never heard before, make a note in your journal. Remember, I told you there's people that have actually taught themselves how to trade just by watching these videos. And I just gave you an absolute perfect lecture on how the universe works and what reversals are in the form of these fractals, or sometimes called head and shoulders patterns. So hopefully you look back at the Bitcoin chart here and you go, oh, gee whiz, there's a big inverted head and shoulders pattern working. The interesting thing about the inverted head and shoulders is it actually comes up with very specific price objectives. And you just simply take a measurement from the bottom of the head, right? And this is the inverted. If it was regular head and shoulders, everything would be exactly opposite. And then we're just going to take that exact number and we're going to replicate it off of the neckline. And that now becomes your price objective all the way up here, right there, off of our little inverted head and shoulders pattern. And notice when we look at our Bitcoin price, that's what this funny little arrow notation is. You can see a little arrow at the top, little arrow at the bottom. I've just literally drawn it from the bottom of that pattern up to the neckline and then projected that off of the neckline. And it's actually saying Bitcoin wants to go to about 35,000. I mean, and I really wouldn't fight this. This is like I said, this is Mother Nature at work. This is like you, at this point, you're saying, you know what? A maple leaf is not going to look like a maple leaf this year. Now, this particular tree, it is not going to make the leaf pattern. And you see every single goddamn leaf looks almost exactly the same. Leaves are for, eat some more. Oh, that's another conversation altogether. Chris is in shock right now. Are you upset? Well, how are you feeling? Where are we? Back to our chart. All right, so this is, of course, a weekly price chart that I'm looking at. Longer time frame. Could this play out over the coming months? Sure, why not? And the interesting thing is this inverted head and shoulders pattern, it's perfectly valid until we actually break this low all the way down here. And notice this low, that's a long way down, right? You can see, I just, let's see if I can, hold on. If we go, slide that there, look at that, it's all the way down there. So what is that? This inverted head and shoulders pattern is valid until we actually break 19,569. I don't anticipate that happening until we once we hit the 35,000, then I could very easily see us roll over. But I don't anticipate that getting taken out anytime soon at all. I still think, and what was interesting is we pulled back last week. Of course, we had some, if we look at the lower time frame charts, they look like absolute craziness. You'd think that people were losing their heads. But the interesting thing, and actually last week's tweets and stuff, the Bitcoin summary was, we had the head and shoulders neckline, we had the 13 EMA, we had the 200 SMA, we had Collins pump chaser zone, minimum 38.2, what I like to call the first stop target. We had just a ton. We had horizontal support and resistance. We had just a ton of support down in this area. So it just didn't, in fact, we had so much support down into this area that I'm sure that the professionals who are actually running the bus, Goldman Sachs and all those people, Joey Diamonds and stuff, they're the ones who are manipulating this price. Don't kid yourself for one moment. Joey Diamond is manipulating this price. Absolutely. And he can, because it's an unregulated market. He can do any old damn thing he wants here. He can break your hearts in two, stomp on them, laugh at you, and there's not a single damn thing you can do about it. That's the danger of unregulated markets. So just, be aware of that, everybody. Anyway, so there were so many technical reasons for support to come in this area that I just don't think they were going to allow price to get down into that area, because it would almost be like a gift to all the public. Hey, hey, here's a place you should be buying. Everybody pay attention, get in there and buy. No way, capitalism is never that easy. So actually, it doesn't surprise me that we didn't get down into that area. Now, the one thing that bothers me here in the short term, well, actually, you know what? We won't get into that right just yet. Let's just finish off this conversation about higher time frames. So remember, we started off the conversation that this is a reload long zone. This is where smart money buys. I do think, we have a concept at the school we call the institutional fingerprint. Because remember, institutions put bottoms in markets, not the public. It's the, the Goldman Sachses that actually put the bottom in the market. And so what we simply do is we like to draw out where the bottom came in. And we like to ask, is there a window where the public was clearly selling? They always sell down markets. And whoever it is that actually did ultimately put in the bottom in the market, they just sucked up all that selling. Just, okay, buy it. Okay, you want to sell it? You're a motivated seller. Fine, buy it. We'll take them. Yep. Just give them all we want, right? You want to panic sell? Great. Here, we're more than happy to take it off your hands. And we actually like to call this the institutional fingerprint. At least that's the name that I've given to it. I know there are other people on social media and stuff that give it other names. You're welcome to call this thing, your Aunt Gertrude panties if you want to. I don't care. In the education program that I run, I like to call this the fingerprint because, in essence, this is Joey Diamond's fingerprints. We can see exactly where his fingerprints are on this market. And interesting enough, you see as the market worked its way up, notice when they panic dumped the market over here, they dumped it into Joey's buy window, and Joey said, what are you doing? This is where I bought. Get your ass out of here. And boom, up goes price. So quite often what ends up happening is if price does dip back down into this institutional fingerprint level, price gets the hell out of there very quickly if it has indeed reversed. So you can see where the institutions are buying. Interestingly enough, this is like 15,000 and change. We have an expression at TRI, of course, and all TRIs know this: sell half on a double. Where did Brian learn that? And I keep in mind, I teach all you guys, right? So where did I learn this sell half on a double concept? I learned it from the floor traders. Remember, I was a broker. In fact, actually, when I was a broker, that was the transition when Canada, gotta love the Canadians, aka Rothschilds, aka 1%, aka oligopoly, aka totally controlled market, aka substitute drama teachers seem to know better economics than economics professors. Or maybe substitute drama teachers are just puppets of other people, which I think is probably more accurate, but anyway. And how does a finance minister of substitute drama teacher societies, how does a finance minister of our country have absolutely no working experience in the financial services industry? It just goes to show how bloody corrupt our whole system is. It's stunningly corrupt. But anyway, that's another conversation for another. And actually, it was interesting. Before I got this video going, did you know I actually had a dream that I was debating Vladimir Putin as to the merits of our Western society versus his communist centralist society? That's how twisted my dreams are. And I don't think the people around the table were actually buying my argument. I think they liked Vladdy's centralist argument. And in a country like Canada, our substitute drama teacher actually likes Winnie the Pooh. He actually looks up to Winnie the Pooh. And now he's totally involved in a major scandal because it looks like Winnie the Pooh was actually manipulating our election process. Go figure. Imagine that. Along with secret police stations. Oh my goodness. I can't believe how quickly our society's gone from free to potentially totalitarian dictatorship. It's quite remarkable, really. Anyway, another conversation for another day. Let's get back to markets. So point of the matter here is this is where Joey Diamond's in here buying, and what a surprise, the price doubles. And so do they maybe sell a little bit to book that double? I think so. I think, especially off of this double bottom, you're probably going to see some more sellers come in up in this area. Remember, we talked about 50% rules. We talked about inverted head and shoulders. This is previous market structure. There's that big ugly M that sort of happened right after the FTX debacle and all that nonsense. Actually, no, I guess this might have been around the Luna disaster. Yeah, actually, I think that's when the Luna thing blew up, which is also interesting too. I suppose if Brian doesn't talk too much about substitute drama teachers, we can get on to that, because lots of talk we should have about lunar eclipses and what's happened around lunar eclipses in this space recently. Anyway, the point here is I think that this market is still pointing up. It's just, if you are a trader, then you really had no business coming in and buying up here and chasing up here. Or if you were trading setups up top here, well, you got stopped out, had to book the loss and just hop off on the sidelines and let things settle down. When we look at things like the daily charts, and especially like 4-hour charts, I think we backed up into support levels. There were some interesting social media influencers that kind of manipulated price around these lows. So I get the impression that there's some liquidity pools down in that area. And what a surprise, market dumped basically down into that area last week and then just stopped on a dime and started to work its way back up. Could you make the argument lower time frame players might be taking shorts off of here? We'll get to that conversation in a bit. Yeah, I think so. But you just have to understand what type of context trader you are. If you are taking short shots against these highs and we get, we just pop up through the top there, then they've got to walk away, right? And you just say, well, next bust in 10 minutes. And again, that's all a part of, you have to identify what type of market participant you are, and then build your trading plan, your business, your small business of trading around what type of market participant you are. If you are a day trader, great. You're in there shorting against highs, buying against lows. Market ranges 70 to 80% of the time. It's, your bread and butter. If you're a trend follower and you're trading, let's say you bought this inverted head and shoulders, then you're not looking at price right now. You're just like, well, inverted head and shoulder has a price objective up here around 35. Let me know when it gets up into that area and I'll start letting them have some. Or if we break through this 19 and change, then I'll just have to reassess whether I really want to be in this trade. And really, when you're looking at weekly price charts, that's probably the best perspective that you should have. I like this as the investor sort of look. Also, too, I would say, there's a gentleman, Simon Dixon, who's pretty popular in the crypto space. And he says anytime Bitcoin corrects around 80% of its previous move, well, that's just a no-brainer buy. So I might argue down in this area, we might have had that 70, 80% correction. So I could understand little old ladies, those kind of things coming in and starting to nanny nibble. That's one trade setup. The Wookiee likes to teach the level 1 kids down in this area. That's logical. It's not rocket science. But again, it's speaking very specifically to that specific type of market participant. As for trend going forward, aside from all the fun lines and where I think price is going to go based on this formation or that formation, I would, one time tested rule that we use, and actually this is exactly what this weekly commodity trend survey is based off of. And that is, where is that? Is that over here? Yeah. This scoring system, you notice this really only has 2 criteria. It just simply asks, what's the 52-week high and the 52-week low? And where is price relative to that 50% rule? Remember, I talked about that a few minutes ago, WD GAM. So in this particular case, AVAX, you can see that the price right now is 16 and change. 50% level is $41. So that means that if I go and buy this and it just goes back to the 50% level, WD GAM, keep it simple, stupid. Can you see how I can get off a double, right? Double would be what, $34, something like that, right? And 50% levels, $41. And frankly speaking, I think that a lot of these 50% levels are all going to be hit this summer. I think we have to get through May and June. And when we get to the daily price chart on Bitcoin, you'll understand what I'm talking about. But the point of the matter here is that, this is this criteria. Then the second criteria is what's the momentum of the market. And the way, to keep it really, really simple, in the weekly commodity trend survey that I used to do as a commodities broker, my momentum was just nothing more than just measuring a fast moving average relative to a slow moving average. If the fast moving average is higher than the slow moving average, then it means short-term momentum is up. And if the fast moving average is below the slow moving average, it means momentum is moving down. It's just that simple. So we go back to the Bitcoin price, and you can see there is the fast moving average, and there is the slow moving average. We also have a super, super slow moving average, but for the purposes of the weekly commodity trend survey conversation, we can put the 200 moving average away for the time being. But you can see clearly where the market shifted. So at this point down here, and of course, remember, I was barking to everybody in social media, do you have your head together? We got to think of a politically correct word that I can use on YouTube that clearly describes that word. Chris, any ideas? If you say merde on YouTube, do they consider that a swear word? It is technically a swear word in French, eh? I'm not quite sure.
It's a good question. I am not sure.
Anyway,
Never
do
mind.
you remember last fall me barking about do you have your shit together and all that? I don't know.
I do. I've made several shorts and clips about that.
Awesome. Good. Also, too, and I don't want to screw this chart up too much, but just to show you, this is a really powerful concept. If you ever see this kind of price action, this is called a descending wedge. That's actually extremely bullish. So there you go. Kids friendly. Aaron says, poop. All right. So the point being that the market clearly gave us a very, very powerful message on the weekly charts that the trend was turning right here. Again, if you're watching this for the very first time, regardless of whether you take the education program or not, if you're like, wow, I've never seen that before, write it down, take a screenshot of it. How can you build a trade setup around this event, right? You can see cross bearish. Oh boy, what a mess. Cross bullish. Oh, hello. It's a really, really simple tool. Anybody can add this to your tool trading kit belt. Aside from all the squiggly lines, right? That's just simple moving average analysis. The one thing that kind of bothers me right now, though, is look, and actually maybe let's go back to that just for a moment. Look how far away the 13 EMA now is from the 30 SMA, right? Remember, like if you saw this right here at this point when the price is absolutely dumping and you saw how far away these two moving averages are. Actually, here, why don't we go there, right? At this point, it took a few weeks for it to come back, but notice price started to come back and actually check things like the fast moving average in here, and the sort of width of that relationship started to narrow. So I'm a little concerned when I see right now how wide this is, and there hasn't been a serious check of this 13 EMA in a while, right? It's been 1, 2, 3, 4, 5, 6, 7, 8 weeks or 2 months since we've had one of those checks. So that's a little bit concerning, but it certainly isn't a sell signal at all in my eyes. And on a weekly basis, ironically enough, I'd actually say this is pretty simple. You just simply say that this low is the bottom end of your range. Remember, we said 13 EMA, 200 SMA, head and shoulders breakout, Collins, top of Collins pump chaser zone, 38.2, horizontal support and resistance. So there is the bottom end of the current trading range. And recent high, there's your top end of the range. And this is your trading range for the time being. Let's might as well keep it as simple as possible. Do you have your skirt together? I like that, cat. So, there is your market state. And you can see for 1, 2, 3, 4, 5, 6, really 7 weeks, we've just literally been banging around in this trading range. It's just that simple. And of course, through this range, oh my God. And back and forth, just drive everybody crazy. But on a weekly basis, not really much has changed here. Still have the upside objectives. The head and shoulders still working away. 13, moving average relationship still pointing very bullish. The problem that we have here, and this is where we now maybe move on to the next conversation. And so let's just go back to that weekly chart and just review, just so you understand what I meant by that tweet. So where the hell is that? It's over here. So what I said was on the weekly chart. Oh, that's a 4-hour. We'll get to that in a bit. Here we are. So fives now, and maybe while you guys are, we got 40 people on YouTube. That's kind of cool. Yeah, we're building. Do you now understand what I meant? And give me some feedback here, you people, especially some of you like Aaron, you've been watching since we just started the video. Do you understand now what I mean by 5s and 6s when I say something like, this is what 5s and 6s on the weekly commodity trend survey look like? Have I properly explained that? Give me some feedback. Chris, you're obviously Chris is he's in the choir pew. Let's put it that way. He's not out in the audience. He's in the choir pew. In fact, he's right by the organ going.
I'm the organ player. Yep.
Yeah, but anyway, to you, did I explain what 5s and 6s mean there?
Yeah. I got it perfectly, but
Okay, good.
that's just
Aaron
me.
says to me, yes. How about Cat? Cat, I think you've been watching since I started blabbing away here. Does it make sense to you what I just said there? I tell you, if you can get this concept, it's incredibly powerful. Keep it simple, stupid. Anyway, we got one person giving me feedback. I got 36, 37, I don't know, 26 likes. That's not so bad. If I'm teaching you something new that you've never seen before, hit the like button, subscribe, ring Chris's bell. Ring my bell. Ring my bell. 5 and 6, the indicators point to the right direction, location, structure. Okay, well, you're coming along. 5s and 6s is just simply we're at the bottom end of the parade trading range and markets trying to point back up. 5s usually mean that we're at the bottom end of the range, but we haven't turned back up in earnest and the moving averages haven't turned. 6s are like, we're at the bottom end of the range and oh boy, right? And actually just off of the dashboard, right? Let's pull up this AVAX and let's just see what the heck this chart looks like. It should be a pretty good example. So yeah, though we were just on this. Yeah, let's go over here. And this is a name I totally wanted to try and buy. Stuart went and got this ledger thing set up for me, and I literally spent about 4 or 5 hours fighting with this damn thing yesterday, and I still don't think I bought it. That damn thing. But there's a W in a reload zone. Do you think Brian's gonna want to buy this? Oh my goodness. Anyway, so what do we say? AVAX? Boom, we'll do it on tether. And we'll zoom out to a little bit higher time frame. So actually, let's do a regular chart. Now, number one, does that look like it's at the bottom end of the trading range? Hey, there we go. Hey, Sela. Nice to see you. And yes, I got your message. Thank you. You are on Zach's list. And I'll probably send the emails out tonight. I was just waiting for 1 or 2 other people that I hadn't heard back from. And then, of course, like I said, I wanted to give everybody that happened to be an alum that didn't know about the option spread course, and I mentioned it here in the video today. If they really wanted to join us, then give them the opportunity to get back to me today. I tell you, man, you want to see just a sneak preview of what Zach's got in store for you? Holy Shiite Muslim. This is super cool. Look at all the, look, this is basically the course. So he's got the whole course curriculum laid out. So, you know, and of course you're not allowed to take this until you've actually completed 1, 2, and 3. But there's basically the curriculum and what it is we're going to cover. And here are all the modules. He's already done all the video lectures. This is going to be, and I'm going to be his TA for this term. So this is going to be a lot of fun. I can't wait to do this because actually I've got a fairly large account sitting on Interactive Brokers doing absolutely nothing. And I'd like to get active on Zach's spread trading over there since we tried to do it together. And I tell you, like my country, you can see Big Brother is coming down like a ton of bricks in this space. Somebody was even posting on the site today that substitute drama teachers, they literally want to force every single Canadian, you are not allowed to buy cryptocurrencies. You must be 100% invested in this Canadian dollar. We are going to devalue the currency and hyperinflate prices, and you are all going to get fucked together. You ready? Here it comes. I mean, God, it's incredible the way these cronies are operating. And it's all thanks to this substitute drama teacher. And I just don't understand why our population isn't standing up to this guy. It's baffling. And we got an election coming up in the next year. And actually, I promised everybody when I first started this, I was never going to get involved in politics. But frankly speaking, I think it's time for Brian to get off his big fat ass and start actually getting involved in this upcoming election campaign, because we got to get rid of this communist. It's stunning what's happening to our society. But then I've always said that Canada's a short, so if anything, it's absolutely perfect. It's right on message what's supposed to happen to our society, what is happening. It's just instead of prices falling in what should be a typical deflationary move, what's happening is the communists are hyperinflating prices because, of course, they don't want their equity to go down. Ugh, drives you crazy. Anyway, back to the message. Stay focused, Brian. Where are we here? Okay, so we talked the weekly chart. Wanted to get some feedback from you guys so you understood the whole process of how the weekly commodity trend survey works. As I said, this thing's still pointing up. Nothing has changed here. The only issue is we are a long, long way from support. And the message that I put out on Twitter along this was hopefully you understand how the 5s and 6s work. But also, too, we're coming into a seasonal peak, folks. So the old adage goes, buy when it snows, right? When you got to get your skirt together. Thank you, Kat. Sell when it goes, right? And remember, once the pros are headed, once they've sold and they've booked this nice profit, better than 30% annualized return, made more money than 95% of all investors. Thank you, Peter Lynch. Remember that. Write it down somewhere. That's the fact, people. Sell when it goes. Well, we are well above that 30%. We're right now sitting 100%. If you just simply bought these lows, which is kind of difficult, but if you bought this W right in the buy when it snows window, that number was about 17 G's. So here we are, better part of 30. What is that? That's about 70, 80%. I love that C pool. I totally want to buy that, but I can't get filled. I've asked Stuart to help me and he just won't help me. He's like, I think he's sitting there going, you know, I could hold on to the bike and well, that's another conversation. I don't want to go down that road. We'll leave that for now. But I think he'd like for me to lose my training wheels on the ledger. But I'll tell you, man, it's damn difficult doing that crap. Anyway, okay, I think I've talked the weekly chart into the ground. Hopefully you understand this. Now, the problem is when we start getting to things like the daily charts and stuff. I've been talking to you guys about this megaphone pattern on the daily. You see, this is the daily stamp chart now. I've been talking to you guys about this daily price chart megaphone forever now. And the worst part about this is that if we had broken here and gone down and tagged the bottom of the megaphone, well, the correction would be relatively slight. Oh, what's the right word to use? Tepid? It would be palatable. The further we go along the megaphone, though, you notice the wider and wider it gets. And of course, look what we have coming up here shortly. What I find fascinating, and I don't understand why more people on social media, I get the impression that a lot of people that are in social media and in crypto, they just don't want to make the connection between crypto and the broader economy and the money cycle, Fed and interest rate policies, risk on versus risk off. Whenever I try to make the correlation between something like the Federal Reserve Board and its short-term interest rate policy and crypto price action, it always seems to land on deaf ears with this space. I don't know why, but as you can see just from this chart, last two FOMC meetings ago, market rallied into the meeting. Then following the meeting, there was a price sell-off. Now, this was an interesting scenario because there was a pretty big US government hearing around crypto that sort of stopped the selling once that hearing started. And that reversed and headed back up. But I think you can make the argument this is what they call buy the rumor, sell the news. Then we had it again. Buy the rumor, bid price up into that FOMC event. And in this particular case, we didn't really sell off. We just kind of melted down sideways. A little bit up, but then back down. And then lo and behold, here we come, another FOMC meeting. We are buying the rumor. And now the concerning thing here is at this point, this was still relatively a friendly market state. Buy when it snows. It had just started snowing. The bottom just came in. So seasonally, we still had a nice window ahead of us. Then we get into March, right? This was all around the Ides of March. There's interesting price action in here. I think that this whole pattern is this seasonal top. And now, of course, we're into May. And as that weekly chart I showed you, this is now starting to get dangerous. It's been literally, I can set my watch to it. Whenever my birthday rolls around, and maybe because I've been barking about it so much, it won't happen this go round. I don't know. But Bitcoin usually, and crypto in general, and you can't see it. It's right off the top of the chart here. Let's pull up the daily chart here. Where is that? That's over here. Usually, Bitcoin doesn't do very well around my birthday. And we have this FOMC meeting. So I actually think a counter trend rally into the FOMC meeting makes perfect sense. And I wouldn't even be surprised if the stock market itself rallies into this FOMC meeting. And then on the other side of it, So as you can see, I've sort of laid out, the daily chart message is this damn daily megaphone just won't go away. The easiest way for us to negate all of this, and I was worried for a while, because remember we did that little lecture earlier about head and shoulders patterns. So theoretically, the head and shoulders pattern, a big component of it is the right shoulder should not be higher than the left shoulder. And if it is, then something like that, then it kind of loses the validity of the head and shoulders pattern. And really what this just turns into, if it does break, is just simply an M top. And that's your pattern right there. So up, down, up, fail. So for a while, I was barking about how this looked like it was going to potentially be a big head and shoulders fractal. And keep in mind, a head and shoulders fractal, that means like a major seed shift in the market, like a major trend change, and really, that sort of long-term cyclical turn that I showed you off the weekly charts, right? This is a very powerful trend reversal message. So I was thinking for a while, because we did come down into this level, I was like, is that going to start painting? Oh, let's see, I screwed it up, sorry. There to, oh, let's go back up there, right there to there to there to there. I was very worried that, this is some sort of long-term trend shift when we were still sort of sitting down in this area. Did you see that, Chris? They want us to insert an ad on Google now. I thought that was funny. All right. Anyway, point of the matter here is we've actually gone and broken those left shoulder highs, right? There's the left shoulder high. We've broken that. So in a weird sort of way, just by the market breaking this high, I'm like, oh, phew. All this is going to be is just a big, ugly double top. And that's fine. You know, market's double top. You can see one up here. We worked our way down and then we came screaming right back up. So I actually don't mind if this is a double top and it does something like that. The only problem is, and if anything, it would be a good thing, is we got to come down here and we've got to figure out whether this thing is actually going to be a megaphone. And if it does have to be a megaphone, you can see if we do go and M out here following the Fed, you know, bifurcation levels, that's actually my ultimate upside objective. And notice that actually works pretty well too, because it's the, there is the whole range, and it would be like 88.6 retracement of the whole range, which would be normal. There's 78.6, Brian's favorite fib. I'm wondering whether we just come back to this 2.618 though. Because notice this is the original uptrend line. So I think probably the most important level that I want to see here, and David, one of our, I think how do we describe David? David's one of our OGs. He was the winner of the first raffle. So just to tell you whether people are interested in buying raffle or buying raffles, that's not what I want to say. Or whether it be in your interest to participate in the raffle. David O is the first raffle winner, and he's now basically site OG. He's sort of like our quarterback of our weekly stock pickers club meeting, and he does a lot of presentations and talks to anybody who's in the stock pickers club. On Tuesdays we meet. And one thing he would absolutely do is he would draw a midpoint of the megaphone. And it's interesting, if I just like literally kind of just break this and say, okay, where's the midpoint? It looks like it's almost like right there. Notice how that aligns nicely with this original uptrend, 2.618 Foggenbaum. Look how this double top came in here, right? So it went down, up, down, it failed through that 100 line, right? You can see there, this yellow line is the 100 line. So we had that right off of here. So it went down, up, failed. And look how the market came down to 2.618 and then just turned on a dime. Again, folks, this is gold. If you're going to teach yourself how to trade, get your journals out. You're using TRI's merch journals, of course. No 2.618s. Take a screenshot of that and say, I have to learn. If I see an M come in the marketplace, I've got to draw the Foggenbaum levels, and I got to watch like a hawk how they act around these levels. Of course, you want to take the education program. We make it relatively easy. We spoon feed this to you on a daily basis to the point where you're like literally seeing Foggenbaums in your sleep. And actually, I've had students in the past say, Brian, oh God, I listen to you so many lectures and so much. I hear your goddamn voice in my sleep. It's sickening. So anyway, the point of the matter here is if this does M out, and I don't know whether this is the high, maybe into the FOMC, we might go up and pop these tops here. That wouldn't surprise me. Candle body highs or trade location. I could definitely understand people focusing like laser beam against there. And then if we did melt down, then I would have to draw my Foggenbaums. I'd have to change them. And you see, oh, now 2.618 actually lines up nicely with man. And that still would correspond with that trend line tag. So I like the idea of the market after this seasonal peak, whenever the hell this damn seasonal, we've got FOMC coming up here. And then we also, and this is brutal, is we have the eclipses. And Chris, can you do me a favor while I'm blabbing away here? Can you tell me when the fall lunar eclipse happened? And if I'm not mistaken, I think FTX blew up right around that date. And then last summer's lunar eclipse, because that was when Luna blew up. All right, so they're cool. All right, yeah, cool. Fucking celestial badass. Next, I shouldn't swear. Just keep the swears down, Brian. So November 8th was the lunar eclipse, and look at what the market did. Now, why did we melt down here, right? We should probably even write on here, right? Lunar eclipse. Did I spell eclipse? Something like that. I think this is when FTX blew up, wasn't it? Chris, do you have those numbers? And then Cole, just off the top of your head, when was the lunar eclipse last summer? And you remember Novogratz went and got the tattoo? Remember when he got the tattoo? And the big wolf of Luna on his arm, and then like literally within a week or something, the damn market blew up. So I don't know, Chris, if you can find the lunar eclipse prior to that. Point is, when's the next lunar eclipse coming? Oh goodness.
Looks like
Five.
May 15th to 16th was the lunar eclipse in
All right,
2022.
makes sense. Thank you. Got both of my boys working on the job here. So there is May 16th. There's another lunar eclipse. So, and then, in this particular case, consolidated, and then just absolutely puked out. So, what's the date of this eclipse coming up here, Cole? 5/5. Oh boy. Well, that's not what I want. I want clone. Lunar eclipse. How the hell do we sneak this in here? There we go. And we will put that on here. So, oh god, this is getting ugly. And then, of course, on the very other side of the damn lunar eclipse, right? We'll put the lunar eclipse up here. There's good old Brian's birthday. So this stuff writes itself. I mean, can you guys not see this? They're gonna come up, they're gonna blow out all of the weak shorts here, rally it into the Fed, then there's gonna be some sort of ugly top, and then the damn thing's just gonna puke out into my birthday. You can see it coming 100 miles away. It's ridiculous. So I don't know whether it's a good idea to get too sucked into the bullish euphoria ahead of all of these big ugly events. And then just for fun, let's see if anybody on social media, you guys over there on YouTube, how does the cadence go? First, we have trade location, right? And I think you can make the argument, top of the megaphone, we got trade location. What is the next thing we want to be looking for if we're thinking about justifying risking our hard-earned money in the marketplace? Anybody know how that goes? And I see Cole. Look at Cole. Excellent, Jason. Nailed it. Give that gentleman a cigar. Cat, write that down, please. Hope you have your journal out. But I'd like to see everybody write down indicator confirmation, indicator confirmation, indicator confirmation. All right, so excellent job, Jason. In fact, here we can even put on here, just like I have right here. I mean, do you guys, everybody, check this out. No. We want indicator confirmation is rule number 2. So do you see when the price was dumping down into these levels? I put on the chart, and I did it off of this level. Daily candle body high low for trade location. And do you see how the market came down into that area along with the fog and bomb and turned right back up? So here we are. We should write on here, candle body high low for trade location. You can see it. It's coming 100 miles away. Let's go. What do I want to do here? Let's go like that, and we will go. How do I do this? Here, and here, right? And then let's put it like there. Okay. Remember on the weekly charts, I showed you the trading range, right? So If anything, you can almost see exactly where this damn thing's going to rally into that Fed announcement. Anyway, where was I? All right, so rule number one was trade location. Top of the megaphone, some foggy boggies, 50% level of the 52-week range. I think you can make the argument we've got trade location. Rule number two, we want to see indicator confirmation. And what is the magic word that I'm looking for when it comes to indicator confirmation? Magic word. Who can give it to me?
I
Andre's
can,
giving it.
but I think that would be cheating.
Pardon me?
So I could give it to you, but that might be cheating.
I know, you're awesome. I'm really hoping all these 40, 50 people over on YouTube hit the, we got 45 people over on YouTube. Not bad. Tell a friend. I mean, Kat, do you think that this would be good for your friends to learn this stuff? Cool. Would you, Cole's a cheeky bastard. So, he will add, hey, Cole, C-Poll is your idea, right? Is that your idea or is that Zugi's? I can't remember, but damn, I want to buy that goddamn thing and I can't get in. Those goddamn motherfuckers. This thing looks just so awesome. Look at that. Oh. Talk about location, eh? Oh, well. Hey, Chris is out of here. All right, bye, Chris. Sure hope I could do this video on my own, but he just took off. Anyway. All right, so let's get back to our conversation. Sorry about that. All right, so number two, yeah, excellent, Andrea, right? And so on, and so on, and so on. All right, so let's, for fun, go look at what the indicators are telling us now. Oh, crap. Houston, we have a problem. And you know what? This reminds me totally of when Bitcoin was rallying up last cycle. I don't know whether I can show you this or not. There were people on social media, and it drove me crazy, that were saying when we were up here, oh, do you see how RSI is making lower highs the whole way along here? And we're just Ming out. We just keep making another M after another M. Look how MACD was Ming out and making lower highs and lower lows. Look at this M right here and then another M. And there were people in social media that were actually saying, don't listen to your indicators. Just go and buy and you're guaranteed to make money. And I was just like, oh, you got to be kidding me. Actually, I really don't hear from those people anymore. And I don't even see them on social media anymore. I think they're just like, to hell with this. I don't want to bother with this. I'm long from zero, so fuck it, just enjoy the ride. Anyway, so the point of the matter here is this, this RSI study, holy crap, look at the divergence here, right? So let's fast forward to today, and you tell me, what's RSI telling us? We see these are our higher highs from here. This is the start of the megaphone. And look at what RSI is doing. Do you see how it's making lower highs and lower lows? That's not a good sign. It's good to see that Willie isn't stupidly overbought. I hate when Willie is stupidly overbought, but you can make the argument, this Williams percentage R has got a big fat M working, even though price made a new high. And where are the buyers? I mean, you see how active the buyers were here. We had a little bit of buying interest there the other day, but we're nowhere near those old highs. Where the hell are all the damn buyers? So we don't have an outright sell signal here yet, so that's good. But what I'm worried about is we have one high, we have two highs, now we have a third high. So you can make the argument from a volume impetus perspective that the bull is potentially falling asleep. The good part about it here is that the bear is not really that active relative to the bull. If we see a big red candle, a huge red candle like this, that could be trouble. So it's not the end of the world just yet, but some people were pointing out on things like the weekly chart that OBV is starting to go into divergence. Doesn't look terrible. We still have this big volume spike here on the buy side. So I don't see those divs off the weeklies just yet. Willie is getting stupid off the dailies. I think this is just more a conversation that the daily chart is just too overextended. The weekly chart still looks okay, but daily, this is starting to look a little bit suspect. So, the whole point of this was rule number one, we want trade location. If you have a megaphone, that's not a bad trade location. We could probably also do fog and bombs. As I said, 52-week range, 50% levels. I think you can make an argument there's a pretty good case for a top up here somewhere. We probably should come back to the midpoint. And if this does M out, we lose this megaphone, then 2.618 would definitely be my first initial objective. And that's right around 22 Gs. So, what is that? It's like maybe a 25% haircut. I don't mind that. That's not a bad idea. Actually, Edoshi, I think the First Republic shit is happening today. And I actually think half of the reason why Bitcoin actually popped like it did here overnight, and oh, by the way, I shorted into that rally. Sorry, folks. But why this popped here, I think this was on the First Republic. Basically, these banks, these regional banks are all going to be nationalized. And then, of course, that means that the government has to guarantee all the deposits, which means that, the Fed's got to go out and print a whole bunch more money, which is dilution of the currency. And I think that this all sets the stage for why we're going to get Bitcoin to 100,000 down the road. But I actually think that rally that you just saw there, I know in crypto, they were talking about meme coins, that Pepe coin popped and stuff like that. But I think actually a big reason why you saw that rally this morning in Bitcoin was because of the news about the nationalization. But anyway, that's another conversation for another day. I don't really want to get into lower time kind of conversations with you guys. But somebody just mentioned First Republic over there on the YouTube, so I just wanted to comment on that. So here's our daily backdrop. And the only way that you can get me to stop thinking about this megaphone is, for God's sakes, just go out and take out this high. Now we're so close. We're like 29.5 right now, and this high is like 31,000. Just go take it out. Go 32,000. And then the megaphone conversation disappears, because then we start having higher highs and higher lows, and you have to start thinking trend continuation. But I just don't see that yet. And so as a result, I'm stuck in this megaphone conversation that's been going on now, basically since the middle of March. This is like a month and a half. We've been just going nowhere at the top of this megaphone. Now, the good part about it is, if you bought the Pepe coins and stuff like that, you're making great money in altcoins. And really, I might argue to a certain degree, that's kind of this kind of market state, is that the altcoins are coming off the lows. I told you about that C pool and stuff like that. Sjord is all excited about Rend. And I got to say, if there was a name that I wanted to buy heading into this coming cycle, that's definitely a name I want to buy. I don't want to chase it right now. And it's actually interesting. Quite a bit of red on the broader market. So for whatever it's worth, I'm still long algo signal. I'm still long Bitcoin. There's the Ren there. Ren's still up on the day, but look at that son of a gun. There's no way I can chase that. I cannot chase that. But if this thing pulls back into reload zones, you definitely know Brian's going to be all over the buy side on this thing. So where is that now? That is basically probably a test of these lows. I wouldn't even be surprised, through that sort of May, June seasonal trough. Maybe we do something along those lines. Maybe actually probably more along those lines. I like that thinking. So we'll call that the high to low trend line. There it is. So could I be a buyer at 78.6? I will absolutely be a buyer if we can get down into here. So if you want to take a screenshot of this and somebody hold me to account over the next few months, usually these markets like to bottom about the second to third week of June. So there's no way in hell I'm going to be buying that there. If I can get some sort of pullback, and the irony of it all is that this might just make some big honking head and shoulders top. I don't think so. But if I can sneak my way in down in here somewhere, down in there, could I get a double off? That would be 90. Yeah. So you can see if I could actually get something like this, maybe we do head and shoulders out. And this coming fall, I fully expect the poop to hit the fan. Maybe not necessarily in individual altcoins, but like right across the market. And somebody made reference there just a minute ago on the YouTube page about the commercial real estate market. I think it's the commercial real estate market into October, November of this year that implodes. And it's going to be like basically along, and couple that with the regional banking system. I think that's actually what sets our base. It gets the Fed from, oh, we got to raise interest rates to fight inflation to, oh my God, please, can you come and borrow some money from us and we'll charge you 0%? And please, for God's sake, support this economy, or we're all going to hell in a handbasket. And interestingly enough, Cole has pointed out that we should probably make note that the next lunar eclipse happens to be somewhere in the middle of October. Oh, what a surprise. So if anything, probably, what this thing's going to do is it's going to go like eclipse to eclipse, right? So early May is your next peak. So maybe it does something like that. And then your trough is somewhere down in here. I don't know. But maybe it might even be something like that. I don't know. But the question here is, if this is an inverted head and shoulders, can I come in on the buy side down in here? And can I sell half on a double? Because I fully expect there'll be a nice little seasonal rally into July, August, early September. It almost always happen. And if anything, do you have your shit together, your skirt together, as Kat would say? I think I'm going to try and remember that one. The question here is, can you set yourself up to be a buyer into the panic dumps that I think are going to come in May, June, probably latter part of June? So that's Jesus, that's like 7 or 8 weeks away from now. Are any of you going to still be watching these videos 7 to 8 weeks from now? It'll be interesting to see whether Kat, who's a relatively new person to this community, whether they're still here 7 to 8 weeks from now. They may have completely lost interest by then. But that would be sort of the scenario I would think. I want to be a buyer once this euphoria of whatever this short-term market rally is in reload zones against original market structure. This actually would be what we would call a shark pattern. Not a shark pattern, a shark setup, where we want to simply try and buy against the 78.6 and the original market structure bottom right down in there. And then the interesting thing is if I can get filled down there, notice if this is some sort of head and shoulders, I should be able to do my shod trade on whatever our seasonal rally is through August, September, that kind of window. That's usually when the market rallies seasonally. So anyway, let's keep an eye out for that trade going forward. Back to Bitcoin. So point of the matter here is, be careful here, folks. Please be careful. If anything, what I would say is take the opportunity now. If you're brand new to this, get your education out of the way. Learn about reload zones. Learn what indicator confirmation looks like. Learn about what is a trading plan. What's the importance of having a trading plan? Learn about trading logs. Why is it important to log everything that you do in the market? How do you hold yourself to account, whether you're actually doing what you said you were going to do? Why do you journal? What's the importance of journaling? And I have to say, when I marked the students' exams this morning and yesterday, well, actually really more this morning, I was really impressed with why the answers that student gave in their exams about the importance of journaling. The people that wrote the exams and all of them passed with flying colors. So way to go. Both Grim as an instructor, Brian as sort of your lecturer, And of course, beating the drum every week with all these videos and daily briefs and stuff. But why do we plan? Did you chase Bitcoin up here? Did you just buy Bitcoin here this morning? Did you just buy into that FOMO? I hope you didn't. And if anything, wow, this is looking like a damn good trade now. Wow. Look at that, eh? Brian should get a pat on the back. Way to go. And actually, that'll probably make a pretty good short, eh? Right there. Hey, this is what I did today. Anyway, so point of the matter here is daily chart. Oh, goodness. This is looking a little bothersome. And we've got all of these fundamental events. Do you call a lunar eclipse a fundamental event, or do we call it a quantitative analysis event now? I'm not quite sure. Where do we fit that? You know what I think this is going to be? I think it's called, I can't remember what it's called. Somebody on social media will know. But anyway, it looks something along these lines. I think it's called like the flower of life or something like that. Anyway, so maybe we have like TA here. You have fundamental analysis here. You have a quantitative analysis here. You have celestial analysis here. And then maybe we'll have, I don't know, the Beamish bark or something like here. We'll have the Beamish analysis over here. And if every single one of them agrees, then you've got a circle of life signal. I don't know, that's being silly. The whole point of rational analysis is theoretically the way the game works, years and years and years ago, was you'd have the technicians over here. And then you'd have the fundamentalists over here. And they absolutely hate each other. And what's fascinating is even on the site now, guys like Julian are TA guys. They love technical analysis, and they'll even say, I don't really like fundamental analysis. Screw the fundamentals. And the price doesn't move because of fundamentals. The price moves because of technicals. Well, whatever. I don't know. What I would love to see all of you get to is the point where you say, is there any point where the fundamentalists and the technicians actually agree? And they overlap. And it's this area where the technicians say, yes, this is a double bottom, buy it. And the fundamentalists say, yes, the US economy is collapsing and the hegemony currency is a thing of yesterday. So you better go and hedge your asset holdings, because if you own US dollars, you're going to get killed. So fundamentals agree with technicals, boom, up goes price, as the US dollar and sort of the inflation shit just gets out of control. That's what's called rational analysis. And that is the basis of everything that I do. I want to be a rational investor, and I want to teach all of you to how to be rational investors, hence the name of the site, The Rational Investor. So I might say here, price is coming off a long way. Technically, we're starting to see those unrelated multiple reasons to justify acting. And then fundamentally, we've talked about the cost of money and the way that the FOMC, usually price gets bid up into the event, and then price has to pause on the other side. But remember also too, technically on the weekly charts, we're still pointing up. So, what I said in the social media tweet, like the tweets here, social media tweet, just the tweet, is I said, and I still stick to this message. I think it's straightforward, that seasonal peaks are coming, but as long as the weekly chart looks the way that it does, pullbacks, in my opinion, are still buying opportunities. And really, this rend is a perfect example. If I could get a pullback into this, I would buy that in a heartbeat. The problem is, do I get that pullback? Please, please, please. So if anything, I'm rooting for this market to come down, because I've got still a lot of money that I want to put into this market. It's just, I can't chase that market way up there. You all know that. Okay, so we'll finish off this conversation with just a quick boo at lower time frame. And in this particular case, when I say lower time frame, What I'm really talking about to you guys is things like the 4-hour chart, right? I really don't want to get into things like, half-hour charts and trade setups and stuff like that off the lower time frames, because it'll just drive you crazy how quickly things change. But anyway, this is a 4-hour chart that I drew up about a week ago. When we were dumping down here, I actually drew these trend lines. Anybody can do this. Do you want to join our education program? And we'll have the privilege to teach you this. And we don't charge that much money, but I'd say this was pretty damn valuable. If you understood this image and you understood how to draw this, then you would understand exactly what's going on here. Remember, we talked about the fact market likes to bid itself up into FOMC events. So really, seeing the market come off of these lows, we were in a buying location. Remember, we said candle body lows for trade location. There is, that social media guy, I won't name names, but we all know who it was that kind of just screwed the market over. And in a weird sort of way, that was actually a buying window down there, right? 78.6 is Brian's favorite fib. You probably heard me bark about that. Fog and bombs off the top. And remember, when we did that higher time frame fog and bomb, oh my goodness, that was incredible how the market pivoted right through that. So getting really bearish here, down in here, I don't think was a very good idea. I will say I was pretty proud of the algo. The algo flipped back bullish, and so the algo is long from this 38.2 resolution. We went through some absolutely insane gyrations, as again, kind of like exactly like this. If you start trading off of these lower time frame charts, remember the weekly chart, it didn't really care about any of this. It's just sort of like, this is just business as usual. But if you start drilling down to these lower time frame charts, and keep in mind, this is a 4-hour chart, you start going down to the half-hour charts, and they are going to mess with your head big time. So, here is that lower time frame chart. It's up and down and up and down. And, there is that insane volatility. Frankly speaking, I think most of you guys in this space, you can't handle this insanity. And I think a lot of you probably got uber bullish here this morning. I mean, still don't know what the hell's going to happen here, but what I think happened was they just ran the stops and put in another M against where they put M's in before. But again, don't want to talk about that. Let's stick to this chart here. So we'll call this the lower time frame analysis for you guys. Heading into the FOMC, there's that megaphone that we talked about at length. We could still see the market work its way up. And there's 88.6. This is Brian's favorite fib. So we can even throw that on there as sort of a visual reference for you. And then notice how this favorite fib actually lined up perfectly with that little double top right there. So let's throw that on there. Brian's favorite fib. It's right there. Let's put this over here. There we go. So I wouldn't even be surprised if they take the market up a little bit higher here. Do they go and break these lows here? Actually, I wouldn't be surprised if you see a pivot through here, but this is Sunday. I mean, anything can happen through here. I do like the idea of taking a short shot off the lower time frames. I just showed you briefly that 30-minute trade, just shorting against these candle body highs, but I wouldn't be surprised if there's some monkey games into the FOMC all around this. But notice, oh boy, this is such a cool indicator. If you start to see all of these these are basically divergence notes. Somebody actually went and wrote a script, and this script just simply paints, because I could show you all of the indicators and all the charts, but then you go, wow, where the hell's the price? I can't see what's going on here. This script makes it really, really easy to see all the divs. It just literally lays them all out. And what is confirmed and what is potential. Whole bunch of potential divs. All somebody's got to do here is sneeze, and all of these potential divs, actually it doesn't write it on there. Actually, I'm surprised why that doesn't write on there. But anyway, all of these divs here, you see P, 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 they'll all turn to C's, and we got trouble. And notice, look how all of these divs, all of them were C, C, C's, bull divs. C, 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 and what did the price do? Woohoo! Took off like a rocket. So Heed the warning. There's trouble brewing in this space, folks. Just
This is
understand
literally
that.
my favorite script. Just
It
to
is.
say, it is. Yes.
So Chris just talk, and if you want to learn about why we think this is so awesome and how that process works, can you see trade location, red boxes, Brian's favorite fib, blah, blah, blah. Can you see market structure? We don't have M's here yet, but oh boy, if this thing breaks down through here, that could be a big ass ugly M. And of course, indicator confirmation, 3 unrelated reasons justify you taking a trade. You can sort of see the short setting itself up here. It makes sense to me. Does this make sense as a new person to investing to come in and play this market right here? Absolutely not. And it's in environments like this that social media influencers might just be slowly slipping the neck. No, as it goes, slipping the noose around their necks, and they don't even realize it. They might be like operating off a lower time frame chart. That Pepe coin thing. Somebody said that maybe they're all rah buy rend here. I think that would be a really, really bad idea. But like that Pepe, for example, I heard that thing went absolutely crazy here this morning. I'm not sure where the hell to look at this damn thing. I guess we'll look at it on Polo, right? And they might be like, yeah, buy this W, you're gonna get rich here, right? And that W there. And they don't realize that they might just absolutely be walking into the biggest trap ever. So, and this, of course, is exactly where the regulators are going to come back and they're going to take a skirt on our faces. That one's for you, Kat. I think skirt is now my code word for poop. I can just see it coming. Oh God, this is disaster. Just waiting. Prove me wrong. Right? Go and take this markup through these eyes. All they got to do, I mean, it's not that far. It's only 2 bloody G's. Just take this market up through this top and this whole conversation disappears. So, yeah, you're right. Doshi says more bulls than bears. But is that a good time for us to be risking our hard-earned money in the marketplace? How does it go? It just says, let's see if you guys, and here's one for all your journals. Kat, I want you to write this down. When they are yelling, you should be what? When they are yelling, you should be what? In fact, it's so important. I'm going to write this down. When they, and in this case, we mean the public, are yelling, we should be fill in the blank, right? Everybody should write that in your journal. And then conversely, and this is the hardest part, and there are a lot of people, old timers. There's one guy, Drenner, I think his name is. I love following him on Twitter. He always says, the cliche goes, the converse side of that. So it looks like Aaron got it, Nure got it. Nure's fucking boss, so that makes sense. Kat got it. Way to go, Kat. Patrick got it. Nice job, people. And then the exact opposite of that is when they are, and we'll put they in brackets, and maybe this should be like in fact, actually here, I think what we probably should do is, and this unfortunately, I think really should go on the daily chart, but we'll put this up here and we will paste that. So that's the beginning of this phrase. Everybody should be able to fill that in. And then what's the opposite of this? When they, and we will call them the public, of course, are crying. Maybe we'll spell it all out. We should be what? And the sad part about it, of course, is, of course, when everybody else is crying, does anybody have any money? Why are they crying? They're crying because they're broke. So, you know, if you understand this statement, then you understand capitalism. If you don't understand this statement, then really you're probably best just to leave this stuff alone and do some learning. Paper trade. If anything, you know, if you're brand new to this, paper trade this. Say, all right, I am going to buy that level right there. Now, by definition, if I buy that level there and I listen to Brian and his key highs and lows, then that means I got to risk down to here. And if he says, well, if I'm right, I got to get paid, then that means, and that means 2 to 1, then that means I got to hold on to this until I see at least 2 to 1, which is right there, or 35,000. So just see what happens. Do we break these lows? And of course, the public starts crying and they're all upset and blah, 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 blah. Or do we go face ripping up into 35,000 and buying here was a half decent idea? You know, do yourself a favor and just paper trade this. I don't know what's going to happen. I'll tell you, the statistical odds of us rallying from red boxes, though, they're not good. I'll tell you that much. Okay, so the point here is sentiment wise, you know, the fact that the Pepes and stuff like that just banged out huge wins. Interesting how this didn't even go to a new high, though, on Polo. You know, you might even argue, can you see how this was a 2 to 1? Right, I'm going to buy that level there. I'm going to risk to the bottom there. And where is 2 to 1? In fact, actually, they were able to get off 2.5 to 1. But what do you think the odds are that the professionals at this game bought that W, said they were going to risk to here, and they just rang the register hard right into that event? If we drill down to a lower time frame chart, what do you think the odds are that there's a big fat M right up there? I bet you're probably pretty good. Let's go a 30-minute chart. Oh, hello. Up, down, fat. Oh, geez. All right, maybe we'll go down to like a 10-minute chart. You can see it a little better. So remember, this is the 2 to 1 level. Do you see how the pros are coming in and just smashing this thing into those rallies? I mean, I don't know whether this thing's done or not. It's interesting if the candle finishes exactly like this. This is an outside upside reversal. Maybe they want more. Is the volume really heavy on this? No, it's non-existent. Oh, Jesus. This has got trouble written all over it. You know, and then an easy way for you to remember this is just simply, you know, it doesn't look like, well, actually, maybe it has. Oh, so close. But really, the easy way for you to remember this is like, this is a 10-minute chart. So we'll change this to like a line chart. And really, the simple expression is, if you ever see the market smiling at you, look out. So you can see, there is his eyes. There's his the lows is the mouth. There is the smile. So if we go through this low, oh boy, big trouble. And I mean, look how far this thing's got to go. You can see where the W's are. So you could really make an argument. Actually, this is everything. Remember, I just showed you that Ren chart. This is exactly the same. I mean, if you really want to buy this thing, I don't know whether you really want to or not, but there's your trend line. It's pretty straightforward, right? We call that the market structure trend line off of the big W. You can see where trend line support is. Oh boy, that's a long way down here. So if this thing M's out, oh boy. And could you make the argument this is probably like a Foggenbaum level up here? Well, if we go there to there and go chaos. Oh, what a surprise. Looks like they want 4.669 here. Something along those lines. So maybe there's a little bit of a high here. But I will say that if this thing goes and M's out here, oh boy, it's over. I would make the argument that the guys who bought this W, they're ringing the register here at 2 to 1. Just a nice big fat win. Way to go. But you can't come in and buy that there. That's just asking for trouble. That's the same thing as coming in and buying Bitcoin up here. That's kind of asking for trouble. Yeah. All right. So what do you think? Did I talk this 4-hour chart? Did I explain sort of the rationale here? Why range traders would be thinking short here? We got trade location, indicator confirmation. Man, all you need is just a big fat M to come in here, and oh boy, you got a big 4-hour sell signal here. I don't think that that's come in just yet, because as I said, I don't think that this is going to happen. I actually like them working this thing up and doing something like that. That's what I actually think is going to happen here. So we'll see how it goes. But did I properly talk this out to you guys? Does that make sense? Does it make sense to you, Chris?
It does
I mean,
indeed.
that's
As a
all
matter of
that
fact,
was
I'm short on ETH right now, so makes perfect sense to
okay.
me.
Well, I mean, if we're trading lower time frame charts, right? That's another conversation. I'm not going to get into that. I don't even know what does ETH look like. Maybe it's got a big fat top working. But then now you're throwing in something for me to look at here. Ooh, did you short that M up there? Oh, you son of a gun. Damn. Chris is turning into one hell of a trader, man. And that's, that's the sad part about this job that I do is that once you guys get good and you've heard all the shit that I need to tell you and you've learned this, then you go off and you actually become my competitors in the market, which I hate. It's happened to fucking Colin. It's happened to that who's the guy that oh, I can name 100 people. And now, the one thing I need to do is actually put them on the payroll, and then that way they won't bail on me. But anyway, Chris also and I, we're planning on doing an opening range trade setup in the futures markets together and through a particular prop firm. And I want to get him totally set up on that so that, if TRI goes belly up, at least we've got that for him going forward. But anyway, that's a different conversation for another day. Okay, so the point here is I wanted to talk you through the weekly chart, the daily chart, and now the 4-hour chart. And hopefully you guys kind of can put price action into context and then give you an idea of what I'm thinking about going forward. Right now, I think they're going after liquidity pools. So they just washed this high. Could they come down and wash these hot lows in the interim? Sure. Could we come back up and wash this high here for some more liquidity? Absolutely. Don't be surprised. And again, also too, it's late Sunday. There's always effery around the market in late Sundays. And also too, we've got all that big FDIC with that First Bank Corp or whatever. That stuff coming down the pike. And then you always have the curveball of what the hell is that Gensler guy going to do? And I heard that Bybit now has basically said that the Canadian government has outlawed Canadians' participation on that particular exchange. So there's a lot of writing on the walls. Just be careful here, people. If you're not bulletproof with your trading plans, if you're not bulletproof with your setups, and bulletproof with risk management, I might actually recommend that the public just leave this market alone. And when they start crying and we hear about a lot of real negativity in this space, then we can start getting interested about risking your hard-earned money. Right now, it almost feels a little too euphoric, which is dangerous unto itself. Okay, that's it for the rants. We'll head on over, talk questions. Through the school term, I like to take this period and just do some follow-up. I hope Grim is feeling okay, but I might have to actually step in and teach the education program, the level 1, this coming term, and that's all right. I mean, this is no big deal. So it'll be interesting to see how this spring summer term goes. If anything, if you want to work with the Beamish, maybe that's kind of like, hey, I might get a chance to actually work with this guy. Might be incentive for you to participate. But what I normally do is I give the community the opportunity to ask me questions through the Broiler Chicken Show and also the level 1ers. And it just gives them the opportunity to have a second sort of opinion, second voice to try and help them understand concepts. So that's what the purposes of this is now. Because school term is out, they're all writing their exams. Did great job writing exams, everybody. I was really proud of you for that. So I think on balance, the school program is going very well. I'm just really concerned about Grim himself. All of us go through life issues. So point here is, should be interesting to see how I manage this going forward if I do have to step in and teach the program this term. And that's all right. It's no big deal. I think I know this stuff. I'm not quite sure. I think I do. I've only been doing it for 35 bloody years. I sure hope I know it by now. Okay, so let's get into these questions. Everybody, ahead of time, if you want to think positive comments, think positive karma, give me some best wishes for my number one job, which is to give my son the absolute best life I possibly can. He is low functioning ASD and he loves going for car rides. And so we will take a 3-4 hour tour of the lower mainland as soon as I'm done with all of you. So let's ask. Hey, there you go. Paulus is already asking. Oh, Paul's another example of a guy who I educated up, and now he's off doing his own website, and half of the TRIers are over there now. Anyway, it is what it is. Best wishes, best karma for you and your son. Thank you, Paulus. Appreciate that. Okay, so here we go. So I recently completed my level 1 course. Way to go. You mentioned lately that the window to accumulate altcoins is here. Absolutely. If you can think out into the fall and winter of 2025. So that would be the fall of 2025 and the winter 2026. That's when, for God's sakes, you got to be selling. But if you can think that, then yes, absolutely, 2023 is the accumulation year. Absolutely. And I've pointed this out, although I don't know if I can find it now. Here's a nice shameless plug for the site. Great to see. Actually, we've got the blog right here, so I can actually show you it, bang, right away on the news dashboard. So thank you, team, for putting that on there. It looks great. But I think I've shown you before, yes, 2023 is an accumulation year, and I totally 100% believe this, but you might find the market doesn't bottom until like January of 2024. That happens a lot, where 2023 is the base and we tank right into the end of the year. In fact, the 2019 was the top, but the market actually topped in the January leaps expiry of 2020. And then like literally the market went straight down into that sickness bullshit bottom. And it was a total con job. The public got completely conned by it. Even the banksters got conned by it. Oh, thank you, Nora. Oh, you're such a traitor. Oh, you're the best, Nora. You fucking rule. Thank you, sir. I appreciate that. Geez, that kind of money, I could go buy some McDonald's for myself, too. Mind you, I'm pretty fat. I don't know whether I should, but thank you, Nora. You fucking rule. Thank you very much. So, point here is 2023 is your bottoming year, no doubt about it. But like I said, you might actually find that the ultimate low in like Bitcoin comes in like January 2024. That wouldn't surprise me. But then it just goes straight up. Now, we know because of Bitcoin, its halving event is in April of 2024. And we know that Bitcoin likes to bottom 6 months ahead of the event. I won't pull up those charts because it'll just, that's it. You've all heard me talk at length about that. So what do I think 23 is going to look like? I actually think it's going to look something like this. This guy, Richard Wyckoff, very famous. I think that everybody's going to get suckered into the long side of crypto, and this is the bottom. All those social media influencers, they're going to just do incredible. But there's going to be a big honking FU that is going to, this is the moment when they're crying, you should be buying. I think this is the low in May, June, probably closer to the latter part of June. Thank you, MM. Love you. Hugs and kisses. This is going to be the when they're crying in like October. So that speaks to your question, I hope. I am looking at Bitcoin dominance, and at the same time, it looks very bullish in the short term. Yeah, none of this conversation is about short-term trading at all. It is recommended from your point of view to go in now or wait a little longer. Well, do I ever tell you guys to chase? Never. Never, 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 never. Want to find reload zones. Want to buy against bottom ends of ranges. I showed you what the bottom in that Pepe looked like. Show you what the bottom in that RNDR, that render. I love this render. This render would be an absolute perfect example of what I want to do in crypto this coming spring and summer and even fall. Can I be patient and disciplined and wait for these levels? I am not going to chase that. Sorry, it's just not going to happen. Can I get the market to pull back into reload zones, Brian's favorite fibs, shark setup levels, and buy here? This is what I do. I'm trying to teach you how to do this. I can't force you to do this. Only you can do this. It's not my money, it's your money. But this is what I will be doing with my money. Can you already start to see the divs building? You can already start. Do you see trade location? So I can't spend your money for you. All I can do is tell you what I'm going to do with my money. So back to your question. Sorry about that. Is it recommended from your point of view to go and wait or wait a little longer? Well, you know the answer, just basically what I'm saying. And I'm not going to give you a recommendation because frankly, I'm not your financial advisor. I will teach you how to build a trading plan. I will teach you all of the requirements. Thank you, Joshua. Love you. Hugs and kisses. My 3 reasons for a trade, I would have already here. There's no way we have trade location. I mean, if you're flipping Pepe coins, okay, fine. I mean, through the weekend, what I like to do for fun, and I was doing this all this weekend, and it was a lot of fun. I'll tell you that much, by crackers. The only problem is I don't know where the hell I have the screen. No. All right, well, I'm trying to get all my coins off of all of these exchanges, and getting this goddamn EOS wallet set up on Ledger is like pulling teeth. Drives you crazy. But anyway, that's another conversation. I like to load this site up. This is fun. And I just like to load this setup, then load up like a 5-10 minute chart and just go hunting setups. And I'm looking for double bottoms in trade locations on bullish momentum divergence. It's everything that I teach you guys. But remember, this is trading off of like a 10-minute chart. This is not investing at all. This is just having fun in the market. So, whoops. So if you are an investor, quote unquote investor, well, that's all that conversation that I had there about render, right? So I don't know about this. If anything, what I would hope for you to do is post your actual chart where it shows the 3 reasons, and I can go, yeah, that's good location. Yeah, that's a good indicator confirmation. Yeah, that's a good trade location. And I can steal your idea and I'll go and buy it myself. And I don't mind. Hey, half of the reason why I built this school was I don't really know that much about crypto fundamentals. I know how to run trading plans. I know how to build fucking bulletproof traders, but I'm not really that good at crypto. So if you want to go and find me good fundamental ideas that have beautiful 3-step setups working, thank you very much. I'm going to go buy it myself. And I appreciate the hard work. Thank you. But I need, there's an expression that I use, and the expression is, I'm from Missouri. So you tell me you have 3 reasons and you think that they're good, but my response is, show me. Right? I'm from Missouri. So especially in US dollar or euro, but not in BTC. Well, if anything, me personally, I would much rather hunt setups versus USD and Euro if you happen to be from Europe and that's your currency than versus Bitcoin. Because if you do trade setups versus Bitcoin, then you're trading versus Bitcoin. But if you get a win and all right, great, I got a whole bunch more Bitcoin, and then Bitcoin price falls in half, then are you going to come back at me? Say, hey, I thought I was supposed to make money from trading and I've lost money. So I don't like trading setups versus Bitcoin. Now, obviously, in a Bitcoin bull market, that works wonderfully. But in a bear market, oh my God, it's a nightmare. So I personally prefer to just trade versus fiat. So just not so sure if I should go for dollar cost averaging. That's a function of what type of risk taker are you? Are you a leverage trader? Are you an options trader? Obviously, they don't trade DCA. Are you a Joe six pack, right? So that means you have a very finite risk window. You can dollar cost average as a Joe six pack, but just understand if you lose 50% of your allocated capital, you got to get the hell out of there. Are you a little old lady? I'm getting the impression you're very much a little old lady. So the point that I would just make is you're actually asking several different conversations here. You're asking several different questions here in this conversation. There are several different conversations here. So tell me, and this comes down to your trading plan. You could have multiple trading plans. This particular capital that I'm allocating, right? And this goes back to the library. Where do I have it? A good financial planner will have multiple plans. Selling. Thank you, Cheryl. Appreciate it. Actually, great to see so many women on this site. This is fucking awesome. We went along. Where's Meg? I haven't seen Meg. Have you seen Meg on the Daily Briefs recently, Chris? I hope she's okay. Anyway, so, here, this is a very typical financial plan. Of course, this is where most of you crypto kids just fall asleep. But you notice I've got tons of different little trading plans. I mean, how many different little trading plans do I have within one big trading plan? You might allocate like 5% of your actual stake to a little old lady plan. You might allocate another 5% to a Joe six pack plan. You might allocate another 5% to Zach's spread trading plan. You might allocate 5% of your plan to just index dollar cost averaging. You might have 5% of your net worth in a real estate proxy. You might have, and then of course, a really good financial plan, you're going to split your asset allocation relative to how old you are based on, are you investing in risk assets or are you investing in non-risk assets? Things like debt, right? There's an oxymoron. Debt instrument is non-risk in this world. I don't know about that, but theoretically, bonds are guaranteed investments. So, people who got invested in that First Republic Bank or whatever the hell the name of that is, I always get that name wrong, or SVB. If you bought a First Republic Bank bond, you got your money back on the insolvency and the FDIC and the government taking over. If you invested in the stock, you got nothing. Zero. Bud kiss. So that's the point of why do I invest in bonds versus why do I invest in equity or something like a commodity. Commodities are interesting unto themselves. Theoretically, as long as Bitcoin has some utility in this world, and frankly, a third party, unmanipulated, cherry brokened, non-virgined asset like Bitcoin, and the whole idea that this is a immutable ledger that cannot be manipulated by substitute drama teachers because the son of a bitch is taking orders from some European communist World Economic Forum mouthpiece. which I think there definitely is a lot of value and need in this world, then Bitcoin's not going anywhere. But Bitcoin, there is one critical element to Bitcoin. There you go. A deflowered of life. Thank you, Joshua. There is one critical thing that has to happen with Bitcoin. And that is, of course, it has to stay above the cost of production. And Andre says here, no offense to actual substitute drama teachers. Yeah, my apology to the substitute drama teachers. And if you are a drama teacher, own that drama. That's cool. I'll go to a play. I'll watch a movie. I'll watch a TV show. But are you qualified to manage a G8 country? I don't think so. So sad. I mean, and since this guy's been in power in my country, oh my God, the standard of living of this country has just collapsed. We're turning into a banana republic here. And now they're making it, like, this is how bad the communists are. Now they're making it so it's illegal to actually go and buy crypto and stuff and get your money out of the system. So yeah, you're right, Andre. Substitute drama teachers, awesome. Go and be the best substitute drama teacher you can be. Love it. Hugs and kisses. But running a G8 country, I don't think so. That's bad karma. And sure enough, my country's going to hell in a handbasket. Anyway, that's what it is, what it is. Okay, so finishing off this conversation. You're asking a bunch of questions here. I've told you specifically about my 3 reasons to justify risking my hard-earned money in the marketplace. You know, if you've taken the education program, location is always critical. Thank you, Aaron. Appreciate it. Have a good day. So location. I want to buy at the bottom end of ranges, right? And if you are a DCAer, then you definitely want to buy at the bottom end of ranges and just be patient, be disciplined, go slowly, reload zones. It's pretty straightforward stuff. But at the same time, too, there's no guarantee in any of this stuff. So that's, if anything, why I like DCAing. And I like trying to figure out what is value. So if you really want to, like, I'm scared poopless, scared skirtless, I just don't know what to do, then always revert to fundamentals. What is value in the Bitcoin space? And I see, of course, you have Bitcoin dominance, right? So can you just be patient and disciplined? And I only buy at or near the cost of production. There's nothing wrong with that. And if it means that you're just like, look, I don't see anybody crying out there, price has doubled since the bottom, I just got to cool my jets and just got to wait for some crying out there from all the crypto kids. Then I'll go and dollar cost average. You don't have to spend a lot of money. It's fine by me. Nothing wrong with that at all. Anyway, that's my honest feedback for you and my answer to the question. All right. And you say you're doing the LOL. All right. Well, if you're doing the LOL, then I want to see you in like the end of June in there accumulating some of these names in reload zones. It's just that simple. BB, I like your example of benefits of DCA into SPY or other large indexes. Yep. Well, especially the indexes, because keep in mind, the indexes are stunningly manipulated. Do you think that those people, the jerks, 1%, Goldman sucks, Joey Diamonds, Fed whoever's, do you think they're actually going to let the Dow Jones Industrial Average go down? No, what'll end up happening is if there are some stocks that are getting absolutely destroyed, mysteriously, those stocks get taken out of the index, and then stocks that are growing earnings mysteriously get added to the index. And then all of a sudden, everything's hunky-dory, tickety-boo, and the index starts moving back up again mysteriously. So it's like guaranteed investing. Guaranteed. So from that perspective, yeah, I mean, index investing, dollar cost averaging, don't ever go and throw all your money at the market in one go. It's actually no brainer. And you talk to a Warren Buffett, you talk to Peter Lynch, hell, you even talk to the BlackRock and the Vanguard people. They all say the same thing. Just dollar cost average. If you don't want to overthink this stuff, even have a little part of it taken out of your paycheck on a weekly basis and maybe a monthly or quarterly basis. And just, you're not there to time the market. You're there just to accumulate the asset. And, when it comes to something like crypto, just understand it's a commodity. So because it's a commodity, we have to be obsessed with how close you are to cost of production. Well, no, there would be no stop loss in a dollar cost averaging. That's actually two opposite concepts. If anything, dollar cost averaging, the price, you want the price to go down because then you get to buy more units at a cheaper price. So I don't know. I don't think you've taken the education program, Mr. Super Google. Love you and hugs and kisses, but I don't think you quite understand how this works. So anyway, I tell you what, I'm going to look at this question. Since you asked it here, you must be a site member. I think I'm going to look at this question because it is a specific asset. I'm going to look at it in tomorrow's daily brief. So Chris, if you can remind me in the daily brief after party, we'll circle around and we'll look at this this name in earnest in the after party tomorrow. Okay. All right. Thanks, man. All right. So on that note, it is 5 minutes past the hour. I don't know how the fuck I talked for 2.5 hours. It's crazy. But off to Liam. Now I've got my real job. Hit the like button. Maybe consider subscribing. As the social media guys say, the best thing you can possibly do for us here is tell a friend, hit that like button. It helps the Google algorithm, all that kind of fun stuff. PMA for the win. We do have a new school term coming up. So if you can participate, we'd love to have you on board. We've got, any OGs watching this. We've got Zach and his spread trade mini course coming up here. Got maybe a couple seats left. If we really are motivated and you really want to participate, I think I can squeak you in. Those are for site veterans, of course. Level oneers, you want to get off your butt and get going. We have not hyperinflated this program. It's still basically the same price that we charged you years ago. And frankly speaking, for this entire education program, spending $3,500 on this, that's a joke. I mean, really, the whole education program should be like 10, 20 grand. So if you need some help understanding the value of the program, we have tons and tons and tons of testimonials and lots of people for you to ask. Go on social media and ask yourself, what do you think of Brian's program? Did it teach you how to be a good trader? In 10 years running this program, I think we've only had like 2 or 3 people that didn't like the program. And frankly speaking, on a 10-year period, that's pretty good. All right. Wish me luck with Liam. PMA for the win. Thank you, Nuri, for your generosity. McDonald's is on you today. Hugs and kisses. Thank you, Chris, for your awesome support here through all this. The only thing left for good old Brian to say at this point is a hearty bye for now.